It's a green screen, and that is what we are seeing as far as the cues from the Asian markets are concerned.
The 200 EMA, if the Nifty bank can get close to that 200 EMA and hold about those levels, then we are bracing for a bit of a short covering bounce.
Bharti Airtel has introduced new, cheaper post-paid family plans.
Some of the approvals came faster than we expected, so we are absolutely on track.
CNBC has put out a note where they say that Reliance is now a bargain buy. It's an 80-point up move that you're seeing on the index, 83 points now, 90 points higher. So yes, the pullback has come through.
Gold prices are hitting historic peaks. I think they have even breached the $2,000 mark.
Slightly over 2.2% of the total equity change hands, and most likely, GQG Partners has gone ahead and completely exited their stake in the company.
So right now, up about 65 points on the Nifty. The Sensex has gained 228 points.
So like I said, a lot of uncertainty, but that aside, the lenders are hoping to proceed with the second round of auction.
No doubt we are given, warning and monitoring from 12th of the March that this spell will be very prolonged.
Still, we are up around 90 odd points, and that is a good gain going by what we saw in global markets as well.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Reema Surabhi will join us here in just a bit. And Nigel is joining us from the newsroom floor as always. Guys, hi. Good afternoon.
Hi, afternoon.
And it's good to see some green finally. And holding, right? 100 and 115 odd points as we begin this new edition of Closing Bell. 17,100 is where we are at. We've had quite a bit of volatility, by the way. I think if you count the number of sell-offs we've had, you can call them shallow sell-offs, but 40, 50 points is not small either. On an intraday basis, we've had 8 of them. 8 40-point pullbacks and then recovery. So it's quite something. But the range has been pretty narrow as well. It's not very large or wild like we had, for example, yesterday or last week, of course, was completely off the charts. To begin with, the Nifty is trading above yesterday's high, which is important. We kind of fell below yesterday's high quite quickly, spent the next couple of hours after opening below, and then finally in the last hour or so, we've come back above that. Another 100 points will get us to 17,200, above which we are basically on a little bit of firmer footing. This is the level we put out last week as well. It's basically a technical level. The market, it was a support, then it became a resistance, into which the Nifty got sold into at least twice in a very substantial way. So 17,200 basically is the level above which the market needs to trade for some more confidence to come back that this is not turning around like we've seen in the last couple of days. Bank Nifty is looking stronger actually compared to the Nifty. Both the PSU and private bank indices are up 1.25% each. Market breadth is strong, 2:1 advances to declines ratio. And I think the chatter about what the Fed will do continues. We'll know when we know that is only tomorrow evening. But, markets are going to argue the hell out of this one in terms of what this will mean or that will mean. But it's by far, I think, going to be one of the most keenly watched FOMC decisions later tonight. We'll, of course, react to it day after tomorrow morning. Reema, hi.
Hi. So the question is there going to be a trade-off between price inflation and financial stability, right? Price stability, that's inflation, versus financial stability. Hi, Surabhi.
Hi, folks.
Finally, right, that relief rally has not been punctured with any sort of profit booking. You spoke about those 7 to 8 dips of 40, 50 points. All of them have been bought into, and we're practically at the high point of the day, 17,100. Europe is being very supportive. So the benchmark European indices are up close to about 1.5%. So confidence is returning on the global stream. There is risk on. The Dow Futures is suggesting that the rally will continue globally on Wall Street. So the Dow Futures is up nearly about 100 odd points. But it's many of the large caps, the few of the large caps which are contributing a bulk of the gains today. The contribution plate, if you pull that up, you would see Reliance is contributing about 45 to 50 points, or even in percentage terms, to the up move today. Outside of that, HDFC Bank as well as HDFC Limited. So Reliance, HDFC Bank, ICICI Bank together are contributing close to 75 or 80% of the Nifty gains today. And even as the banks are doing well and outperforming, IT continues to struggle in trade. So the Nifty IT index as well as the individual constituents are not participating in the up move, with the IT index now extending its fall. Pull up the intraday chart. 1 hour back, the Nifty IT index was down 0.7%. Now it's closer down to about 0.8, 0.9%. So IT continues to struggle in trade. And from the beginning of the whole global turmoil, the Nifty IT index is down about 7-odd%.
Oh, yes, absolutely. But this market's got two solid engines today, right? It's got Reliance firing away, it's got banks firing away. And both put together, I think, are enough to take care of that pressure that IT is exerting. Just want to add one more point to what you folks were discussing. I think the mid-cap market is going to take its own time for the nervousness to ebb. And that's quite evident in the way the mid-cap index is behaving. It's 0.5% up. Advanced declines, of course, there are more advancing stocks, but there are few bargains that are doing extremely well. But otherwise, there's still some sense of caution in the broader market. You can perhaps say that lines are slightly narrowing, but you still have more advancing stocks than declining stocks. Let's go across to Nigel for his take as well. Nigel, I guess the bulls will just keep their fingers crossed and hope that they don't wake up to more bad bank news from the West, because this is a recovery after a long time.
Well, that's right, and we're holding, right? Even if you get those 20, 40-point downticks that you're seeing all through the trading session, they're getting bought into. So actually, today's a good session. And big boy Reliance Industries as well has held one up. And, the point we made earlier today that the Nifty Bank holding above the 200 DMA, that's the most crucial part. And currently, it's 180 points above that level. So that's the key reason that, in fact, the Nifty is holding higher. If the Nifty needs to move higher, the Nifty Bank needs to conquer this level decisively. So the 200 DMA, remember at the start of this week, that's on Monday morning, we started at that level. Yesterday, we slid a little bit, but currently we are holding closer to around that 40,000 odd mark, and that's very, very vital. What is the options data suggesting? The 17,000 put, that's seeing writing yet again. So that's giving some bit of hope that yes, the lower level, that's 16,850 to around 16,900. That's the buy zone. If you get that zone, you need to take that risk and go ahead and buy the Nifty at those levels, because evidence is the last few sessions we bounce up there. The problem is now on the upside. The 17,100 call, that's seeing a big surge in terms of open interest. And on the call side, that has the highest open interest as we speak. It's nearing close to around a crore odd. So the resistance zone will come in at around 17,150 to around 17,200. Nifty Bank needs to hold above the 200 DMA, decisively cross that. Help the Nifty move towards that 17,150 to 17,200. And given that this market is net short, if we can hold at those levels, we could be bracing ourselves for a bit of an up move. We're not out of the woods, but a net short market always gives you hope that any kind of good news can trigger a bit of a relief rally. Let's see how that plays out.
Thank you for that. Devyani International, a large block deal of 3% equity. Very recently, Nimesh was telling us in his dealing room chatter about the possibility of a PE selling in a large block deal, and that seems to have played out today. The stock has slipped as those volumes get traded. Let's tell our viewers what we've lined up on the show today. A whole host of stocks are in focus. HDFC AMC, UTI AMC surge on the back of large block deals.
Sterling and Wilson up 7% after emerging as a successful bidder for an NTPC renewable energy project worth 2,100 crore rupees. So we'll turn the spotlight on that stock.
The gas companies surge as CLSA releases a positive note and believes the regulatory regime will become more favorable from April. Details on the show.
We'll discuss market technicals with Jay Bala of cashthechaos.com. And also top portfolio ideas with our alpha manager on the show today, Amit Gupta of ICICI Securities PMS. All this and more over the next 60 minutes.
Okay, well, how should you position yourself in the last hour of trade? What trades to take or not? Mitesh is with us to tell us all of that. Mitesh, afternoon again. Good to have you with us here. Intermittent sell-offs, but always coming back so far. What would you want to advise?
Yeah. So, good afternoon, Prashant. I think the the good thing is that one, as we said, we'll possibly stop falling, do some choppy base building, and then we'll make an attempt to get past 17,150. Now it looks like that we are about to do that. The hourly and the 2-hourly indicators have started at least getting into rising mode. So in case we start getting past 17,150. Expect 17,250, 300 zone to be visited, and in the best case scenario, even 17,400, 450 level. So I think that is the kind of pullback which the markets can possibly play out for. Having said this, trading with this stock specific basis also should be on the long side. We've been advocating as much from the beginning of the day, and I have 2 buy calls right now. SBI Life is something which is reversing very nicely after a correction. So that's a buy. Keep a stop just below levels of 1084 and look for a bounce back or pullback target of around 1125, 1130 on the upside. And then SRF Limited is the other one which is on the buy list. It's given a good breakout from a sideways consolidation. So keep a stop just below levels of 2325 and a target of 2420 is what I would suggest.
Okay. All right. Thanks, Mitesh, for that. Let's quickly focus on some of the stocks that are really catching the eye, and a couple of them are actually the AMCs. We're talking about HDFC AMC as well as UTI AMC. Both of those stocks have been up and about ever since we got those big block trades happening. Vivek is here with the details. Vivek, do fill us in. I mean, block trades happened, but there's no letting up on the stocks. Quite a move today.
Well, absolutely right. AMC stocks are seeing a bit of a surge today, some buying interest after a while. HDFC AMC, it's actually given the fact that the overhang of further stake sale from GQG Partners has now gone away. So in yesterday's block deal, almost 2.2% stake is something that they've exited, and LPI Mutual Fund has picked up the entire stake. But when it comes to HDFC AMC, very interesting trigger and expected to play out over the next couple of quarters at the earliest. Aberdeen Investment Management, actually on December 6, 2022, had intimated that they are looking to exit their entire 10.21% stake, out of which 9.9% stake they were looking to sell to one single interested party. So now once that happens, analysts believe that the stock that was deleted from the MSCI index will once again get a re-entry back, and also the overhang of any sale goes away. UTI AMC yesterday 0.9%, almost 1% stake was bought by PPFASMF, and on the back of that that particular stock too is seeing quite a bit of traction in today's trading session.
Thank you very much for that. Let's invite Hemang Jani of Motilal Oswal on the show now. Hemang, thoughts on HDFC AMC and UTI AMC?
Yeah, good afternoon, Rima. I think the fact that there has been a block deal means that supply overhang is no more there, and because the entire space has gone through so much of correction and has been a big underperformer, so you're seeing some sort of buying interest there. But overall, our take is that compared to AMC business, we are more positive on the wealth side. So we have positive view on 360 WM, which was erstwhile IIFL Wealth. And to some extent in the financial services, angel broking is something that we prefer. And we think that the overall positive traction there is relatively better compared to the AMC stocks. So you might see a little bit of pop, but not too positive given the subdued performance of the overall the inflow which are there, and the SIP part also because of the lackluster market. We are not seeing any great traction there.
Yeah, Hemang, the insurance space is also buzzing a little bit. Again, huge underperformer over the last 3-4 years. Not very much, 3-4% kind of moves across the board. Anything there you're noticing?
So, Prashant, typically what we see is that when the banking sector goes through, some kind of a sell-off or underperformance, some part of the money gets diverted into insurance, which is relatively a stable business. And incrementally, we have seen that the data in terms of the premium collection has been better, and that sector also has underperformed. So I think partly because of that, we are seeing some interest in SBI Life and ICICI Pru. Both are our preferred picks within the insurance space.
Okay, so those are some ideas on the insurance side of the market. Hemang, good afternoon. I think the big stock that everybody has been talking about is obviously Reliance Industries and this big move that's happened today. Of course, a couple of those brokerage calls, CLSA, Jefferies, JP Morgan, those calls are definitely helping. The calls are closer to 3,000 on the stock. Would you concur with that kind of a bullish view?
Absolutely. I think Surbi, having seen a 20% cut in the stock price and incremental, news flow is turning positive for the O2C business. The gasoline spreads are getting better. The the windfall tax part, there are some positive news, and the spreads also, when it comes to the petchem, are showing some improvement. With stability in the retail and the telecom business. So yes, in terms of risk reward, surely Reliance becomes a preferred pick also.
Okay, wanted to get your thoughts in on PVR. We had this large block deal which took place yesterday. Warburg Pincus exited, but there were so many other, marquee buyers like SBI Mutual Fund, which entered into PVR. Thoughts on PVR from here on, now that it's going to be a much larger entity with Inox in its fold?
Absolutely, it's a unique play, and the fact that eventually we are going to see this merger happen. There is going to be a lot of synergy and cost saving to them, and also the fact that some of the movies have been successful at box office, and the pipeline is looking better. There is some interest. But because of the way the valuation continues to be on a higher side and the way the OTC part is catching up, where there is a genuine disruption for the media play like PVR. So because of the high valuation and the disruption, we are staying away. But if the stock corrects by, let's say, about 8 to 10%, definitely it can provide a good entry point.
Okay, all right, Hemang, hold on to that thought. Well, let's focus on a couple of these city gas distribution companies. Nimesh had brought us the standard brokerage of the day. Nimesh, both those two stocks, IGL as well as MGL, they're reacting to that note. Tell us more about it.
So, Nigel, largely they're reacting because of the CLSA note, and the note very clearly says that the regime, the regulatory regime is changing for the better for these city gas companies starting April 1st. So that's the key reason why they went out and upgraded IGL to buy now from Outperform, and they've sharply raised the target price on MGL now to 585 versus 420 earlier. Even on MGL, while they maintain a buy, they've sharply raised the target price on MGL now to 1260. Now the key reason is, as I said earlier, the regulatory regime is likely to change from April 1st, and what I mean by that is the gas price formula, according to which the price from April is going to be capped at $5.6 Mbit per MMBTU, which means that there will be a 24% reduction in the domestic gas price starting April 1st. That's the key reason why the CLSA expects that there will be pricing power as well as volume uptake. Even from a volume point of view, CLSA believes that the push for CNG vehicle is going to sustain, and there are a lot of OEMs who are pushing for the CNG vehicle. So the volume trajectory is going to be strong for city gas companies going forward. So it's a combination of there is going to be volume uptake as well as there is going to be pricing power as well. That's been the key theme on why they went out and upgraded both the city gas companies. On IGL specifically, CLSA has raised the EPS estimates by 6 to 15%, and they believe that the double-digit volume growth as well as pricing power is a rare combination, and hence they went out and upgraded. On MGL, the rating has remained the same, it's a buy, but they've raised the target price largely on the PE multiple expansion. So from 11 times now they are giving a multiple of 13 times, and hence they've raised the target price in MGL as well. But the key is the gas price cap which will come from April 1st. So that's a key trigger to watch out for, not only for city gas companies, but it will also have a big impact on the likes of GAIL, which probably will come out in the next few days. The tariffs for GAIL as well. So the whole space, the city gas as well as the oil and gas space, looks like there is some regulatory changes which will come, and that's the reason why the entire sector will be in focus for the next few days.
All right, valid points, Nimesh. Thanks so much for that. Hemang, you heard what Nimesh had to say with regard to that CLSA group. They're saying that the regulatory framework is changing for the good. There's going to be a change from April onwards. It'll spur volumes, pricing power as well will come back for them. And they've upgraded the earnings for one and the multiple for the other. What's your view on both these two stocks, IGL as well as MGL?
So, Nigel, we have a positive view on MGL and Gujarat Gas. And yes, I do agree that because of the fall in the gas price and the fact that the CNG is becoming a popular fuel, and you are seeing good volume growth with some stability in the margin. But we think that IGL valuation is on a higher side, and versus that, Gujarat Gas is better placed. So that is something that we prefer at this point of time.
Okay, so that's the call on some of these gas stocks. All of them doing pretty well in trade today. 17,114 days high. We'll take a break, discuss some more stocks, including, of course, some of the other key movers on the banking side of the screen as well. Back in just a moment. And also, we will be discussing portfolio bets with our alpha manager of the day, Amit Gupta of ICICI Securities PMS, joins in on the other side.
Welcome back. Building on the gains, it's 17,120, a 132-point rally on the Nifty, with the Sensex almost approaching a 500-point gain. Hindalco has suddenly moved up, so pull that stock up. And Adani Group names like Adani Green, Adani Power locked in an upper circuit of 5%, and mid-cap banks and financials are having a good session. So Ujjivan Small Finance Bank 4.5% higher, IDFC Limited gaining in trade. RBL Bank has moved to the high point of the day, Manappuram Finance. So across the board, financials are having a good session. Another one that you should keep on your radar today, Sterling and Wilson, 7% higher after emerging a successful bidder for an NTPC renewable energy project. Yash joins in with the details. Yash.
Well, Rima, this is a significant contract for Sterling and Wilson Renewable. It's received a contract from NTPC worth about 2,100 crore rupees. The place of execution would be Gujarat. The total order comprises of about 1,200 megawatt solar PV project. Now, this has 4 blocks of about 300 megawatt each. What sources tell us more about this particular order is that it is to be expected in terms of awarding in about 40 to 45 days. NTPC in this particular order is likely to import the modules, which is expected to lead to a faster execution of this project. Out of the total 2,100 crore order, about 1,400 crore is expected to be executed in FY24 itself. And this order, according to our sources, is expected to get gross margins anywhere between 10 to 12% to Sterling and Wilson Renewable. One important point that I want to mention, do not confuse this particular order with the order that Sterling and Wilson Renewable received in August 2023. That one was a 2,200 crore order, which was also received from NTPC in the same place of execution. This is a different order. So in totality, in about a year, Sterling and Wilson Renewable has received order worth 4,300 crore from NTPC.
Right, no, absolutely. Interesting details. Yash, thanks very much for that. Do you track this one, Hemang? Any thoughts?
Prashant, don't cover this one and haven't looked at it, so won't be able to comment.
All right, we'll leave it there then, Hemang. Thank you very much for joining us. Good speaking with you as always. Appreciate your time here on CNBC TV 18. Our alpha manager of the day is with us. Amit Gupta is Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. Thank you very much for your time. You know, a little bit of volatility today, but mostly the market's been up. Are we finally putting, you know, all the mayhem and sort of downside behind us? Is it looking a little better as you look ahead?
So I think the levels are good, no doubt about this. I mean, if you look at the last 2 years now or more than that, the mean price of the market is around 17,000. And this time, so we have come below the 5-year, price to earning average also, because that was somewhere around 18.5. And now at 17,000, actually, we are somewhere little lower than 18 times, because financial year 24 earnings looks like it will be somewhere close to 950 EPS. And that is where actually the markets are looking little lucrative. And if you see the premium over the emerging markets, which was higher, more than 100% premium, now it has come down to 60%. So that is where my sense is that when the dollar is topping out, because in this whole scenario, you have not seen that dollar is shooting up. So when the dollar is lower, so it is around 103, 105 dollar index, it looks like that when the things are getting stabilized, though the central banks are very agile this time. So if the things are getting stabilized, the money flow from FIIs, my senses will start into the emerging markets. And when the Indian markets are getting more attractive and their expensiveness is reducing, so I think India can be one of the good bets. And some of the heavyweights have come down to good levels now. That is what I feel in the large cap space.
All right. Hi, Amit. Good afternoon. As we speak, Amit, the markets have moved to the high point of the day. The Nifty Bank, that's making the move because today's a financial Nifty that has its expiry that's playing out. And that's clearly the one that's moved to around 40,000 odd. 20 DMA at 250 points away. So we have crossed the 200 DMA on the Nifty Bank. Let's see whether or not we can get past, the 20 DMA as well. But Amit, you're sitting on cash normally. I think as a portfolio, it'll sit between 0 to around 20%. As of now, what is the cash level you're sitting on? And have you started deploying that money? If yes, which sector are you looking at?
So we are totally deployed now, near 17,000. And that is a strategy we have been carrying actually in the previous declines also. And that has really worked well. though market has swung actually on both the directions, above 17 and below 17. But I think these are good levels to be invested. And if you look at from the sector perspective, what we believe is that, some of the utility companies, the power stocks, they are doing much better now. Previously, we saw some of the PSU banks performing better. And now I think the money is moving more towards the utility companies. If you see, for example, NTPC, so we have inducted that company actually in the portfolio, though it has been a very low beta stock historically. But now if you see the discounts, they have already paid more than 60,000 crores. And I think that is a game changer. And that is why if you see some of the utility financing companies, for example, Power Finance, they are also coming out after 10, 12 years of period. So NTPC, our sense is from an outstanding of around 1,23,000. Now it is reduced to 62,000. And the company is moving into, the more renewable space. And their, the number of GV actually is expanding. Their capacity is expanding. So our sense is it is a well-placed company now, and it has almost a fixed ROE structure. So in this kind of volatile market, generally the money flow goes into such kind of stocks. And that is where I think power is one space which is looking good. Along with, I think the evergreen space has now become capital goods, because you are seeing that now in this financial year ending, government is almost close to, now they have done this 7.5 lakh crores of capital spending for this financial year. And the coming financial year, I think another 10 lakh crore what they have proposed, I think will be done mostly. And these companies which have sold their non-core assets and totally focused on the railway and the road focus on road capex, I think they are doing good now.
Okay, so you like some of the capex plays, some of the power plays. Got that, Amit. Let's also talk about insurance. Very interesting moves today, for instance, on an HDFC Life. Beaten black and blue, it fell from, I think, 600 odd levels in January when the budget announcements came in, fell all the way down to 450, and now there's a recovery. But do you think this is a durable recovery? And do you think the worst of these issues with their high-ticket products, whether they're behind these companies? How do you look at the life insurance?
So my sense is still the money will go into the lenders, the banking. I think the non-lenders will find it a little tough. For example, the insurance businesses, despite coming down, I don't think the valuations are too low. And that is a problem. If you look at the loss ratios also, they are higher. And that is where I think there is some period of consolidation more left into the insurance company. So obviously you had the life insurance which had beaten down more because of that particular news of after budget. And despite today's move, if you look at the general insurance, it has not seen that kind of move. I still believe general insurance looks better going forward, actually. And that is where I think more money flow is likely to come. So it has fallen less relatively. And I think from here, so if some kind of traction comes, it can go there. But overall, what we are focusing more in our portfolios, it is more the lenders right now, particularly if you see the PSU banks. Because these are more corporate linked banks. So that is where there is more confidence. If you look at the RBI survey also recently, the corporate confidence now is almost 110, more than 110% if you compare with the pre-COVID period. And that is where if you are lending more, I think your money making scenario is much higher. And when, now the credit growth is almost 16.5%, your provisioning coverage ratio is much higher. And now we are seeing that the margin, because in the banking, now we are talking about that the margin is coming under pressure, right? So we are saying that the FD rates, which were not improving before, now they are increasing. So NIMs will come under pressure. But if you look at the personal loan growth in these banks, it has actually grown. And that is where the margins actually can pick up again in that particular segment. If you look at the corporate pricing of loan, it is also better. So that is where I think what market is expecting that NIMs, can come down. I think if some part of it does not happen and the prices are already lucrative, you will, I think, start seeing the money flow going into those PSU banks at these levels now.
Amit, is there a risk to Bangalore-based real estate companies slowing down in terms of demand? Because technology wages are likely to moderate next year. We already had news about how Wipro has cut down the fresher hiring salaries. That had been chopped down by nearly 50%. Global tech giants are laying off people. In lieu of that, do you think there is a risk to Bangalore-based technology-dependent real estate companies slowing down in terms of growth rates? And is it priced into the stocks right now?
So you are definitely right, because IT is going through a phase where there is a lot of uncertainty right now. Even you are seeing a lot of churn happening at the top end of the IT companies currently. But going forward, if you look at on a broader basis also, though in the top 8 cities, we have seen a good registrations now, more than 3 lakh units of registrations in India in the last, almost 7, 9, 8 months now. And I think it's a good number, which is coming up. But still, I think the real estate has to fire from all the cylinders because the interest rates are higher. I think the people who are at the age of, let us suppose, 45 years or something, I think it's really tough for them because their, the tenor will not be increased. Only the EMI will be increased because they can get only up to 58 or 60 years. So that is where in the higher interest rate scenario, some kind of impact, I think, is obviously likely to come on the real estate.
Amit, thanks very much. Good speaking with you and candid conversation. Thanks very much for being with us here on CNBC TV 18. We'll take a break, and as always, we'll get you a check on what's happening in dealing rooms. Nimesh joins in on the D Street Chatter segment, and we also get you what are the short-term trading ideas with our technical experts in a bit from now. Stay with us.
Welcome back here to the closing bell, and we are coming to you live from the CNBC TV 18 Motilal Oswal newsroom. Well, it's that time of the day where Nimesh joins us and he tells us what's going on and what he's picking up on D Street Chatter. Nimesh, what's the sense? It's a good day, it's a green day, but what's the sense on flows?
I think it's a good day, more like a relief day for the markets. The kind of relentless selling we've seen for the last many days. It is a bit of a relief day, so to speak, largely on back of global cues and a bit of short covering as well. In terms of flows, again, it's a mixed day, but the selling intensity is much lower compared to what we've been seeing for the last many days. The bank Nifty is up more than 500 points, but again, the feedback there is selective selling in the private bank stocks. So that, again, from the flow point of view, there is some bit of supply coming in the bank's names. I guess the big event to watch is the Fed outcome tomorrow. That, I guess, will set a tone not only for the Indian markets, for the global markets as well. So there is the feedback is there could be a scope for further short covering rally for the Indian markets, given the fact that the FIs are net short, aggressively for Indian markets as well. So that's the overall hope that maybe you'll see a further short covering rally in days to come. I guess 16,800 is acting as a very strong support in the Nifty. So given that as a big support, there is a chance that maybe you'll see a bit of a pullback rally. So that's kind of more of an hope. But two things. One, from a flow point of view, there is still supply coming in the financial names. That's the overall feedback. But the sense is maybe post the FMC outcome, you might see a bit of a relief rally, largely on short covering. And
let's see what they do, because first the fear was they'll do 50 basis point. Then in fact, now there is a fear, suppose they don't do anything, then they're going to be confused. I think bang in the middle, 25 basis points will be the best possible,
that's the expected outcome.
Yeah, 70-75% as of now. But Nimesh, you told us about Devyani. An hour or so ago, we had a large trade that took place out there. What all are you picking up?
So 3% equity has changed hands. That was a sense I had picked up last week as well. So 9th of March, we had highlighted that there is going to be a large block. And I believe from a selling point of view, it looks like the private equity investor was a seller in today's block. Doesn't look like a clean out trade, but a large sell from the private equity is what I understand in Devyani today. So disclosure will be important. So that's the first one. The second stock is ICICI Pru Life. After a long time, some bit of buying traction is back in the insurance names. And while HDFC Life is a bigger gainer, but in terms of Pru Life, the sense is there are buy flows at NFI desk in ICICI Pru Life, and hence a big move in that stock today. The third stock is Greenlam. Even in Greenlam, there is a large block, nearly 3% equity changing hands. And while not much clarity on the details, but disclosure will be important. The sense is that maybe the promoter entity was on the sell side, so that clarity would be very important in Greenlam today. So that's the third one. And the last stock is Interglobe Aviation. Again, this is one stock which largely benefits from lower crude prices. Stock has been consolidating, but now Citi has today put out a report on the stock. They've upgraded the stock to a buy from sell, and they've also added a 90-day positive catalyst watch on the stock. So maybe on back of that, some bit of buying traction is back in Interglobe Aviation, and hence that's the fourth stock to watch out for.
Interesting list of stocks. Nimesh, thanks very much for that. Well, Mitesh is with us to tell you what to buy or sell today for a reverse trade for tomorrow. Mitesh, what do you have?
So, Prashant, I think, we haven't yet crossed the 17,150, but the indications and the possibilities are more on the upside. And that's why, we'll possibly go with long positions. Tata Com has reversed very nicely. That's a VTST. Keep a stop at 1204. Look for targets of 1235 to about 1240 here. And Titan as well is a VTST with a stop at about 2495 for targets of 2540.
Okay, thank you very much for that. Let me quickly talk a bit about IT. IT is a sector lagging in trade today. The Nifty IT index is down 0.9%, so not participating in the up move. Now, Kotak has written a report about how the current banking woes will impact the Indian IT companies. They're saying that large US banks and European banks were big spenders on technology. They spent aggressively on cloud migration, technology upgrades so that they could compete with the cloud natives, digital first, fintech type of companies. Now that these companies, the banks, are under stress, their focus is going to be on capital preservation to make sure that they have adequate liquidity, adequate capital, and therefore they will turn prudent on spending. And that spending is perhaps the technology spending. And therefore, according to Kotak, they believe there will be a pause or a slowdown in the pace of digital and even cloud programs. And according to Kotak, their anticipation is that March quarter is going to be weak. They're looking at a 1 to 2% cut in the growth rates. In the subsequent quarter, that's the June quarter, Q1 of FY24, there will be a moderate uptick, but things will start normalizing in Q2 FY24 onwards. So March quarter will be rough. There could be a cut in the growth rates. In the next quarter, things will start picking up, but it will go back to normal only 2 quarters hence. So that's the view coming in on Kotak. I just want to also quickly, put on the table, and I think this would be instructive, is which are the IT companies which have exposure to the banks where concerns have already been flagged off. For instance, something like Credit Suisse. Now that Credit Suisse has been folded into UBS, what happens to their tech spends, right? It's unlikely perhaps that Credit Suisse will be spending on technology anymore. Now, according to Ambit, and they've done some analysis using LCA filings, which are basically, H1B filings and, other sources, and they have come up with a list of these clients of some of these large Indian IT companies. So IT companies with exposure to Credit Suisse include TCS, Wipro, Cognizant, Tech Mahindra. IT companies with exposure to UBS, and if you could get that list, up on the screen, you've got a TCS, Wipro, Cognizant, Infi, HCL Tech. First Republic Bank, I'm highlighting it because despite the first round of infusion, it did need some liquidity support, so market is a bit stressed. Emphasis is a company which has exposure there. And SVB, we've been talking about it, and the exposure is very, very negligible, but it's companies like Infi, TCS, and Cognizant. So across the board, there are, IT companies with linkages to all these financial institutions which are stressed. And the question is at least what happens to their tech spend, and is it going to hurt? So that's about IT. Let's invite, you wanted to say, yeah.
I was just looking at First Republic Bank. Even yesterday we had that 40% drawdown.
Plus drawdown.
So we need to see what happens. There's some chatter about how JP Morgan has become an advisor of sorts to look at possible strategic sort of moves ahead for the bank.
I think they're trying to get more people to invest in it.
Maybe some sort of equity raising option. Yeah. So let's see how it goes. By the way, the futures on Wall Street are doing very well right now. They're gaining more traction and momentum, 166 points higher. That's what Dow futures are doing. So all looking good as far as global markets are concerned. Where does that leave us? And can this rally continue? Well, let's put that question to Jay Bala of cashthechaos.com. Jay, thanks for joining in. Now, your view has been well documented. I was hearing you actually, I think just the other day or yesterday as well. And you were saying that, we can get a bit of a, relief rally, these short pauses. But you're still looking at the possibility of more downsides and a breach of that September low, 16,850. So you're still retaining that view? Or do you think there's a case where things can turn?
Yeah, thanks for having me on the show, Surbhi. See, the markets have come to the very key level of 16,747, which is the September low of last year. I pointed this out that market could see a relief rally close to these levels, and the markets are doing that. And the markets are firmly engaged in a downtrend. And we could see the Nifty bump up somewhere close to 17,300, 17,400. Things wouldn't change much but there's a gap that's left on the 10th of March and 13th of March, and there's a gap on the downsides between left on the 20th of July. So that's about 16,400. So as they say in London, mind the gap.
All right. What about banks? Today, banks, of course, are doing well, but you anticipate banks to lead the decline from here on. Take us through your view.
Yeah, see, the banks have just had a breakdown last week, and they are seeing a short-term relief rally, which is in line with price structure. What we have seen a breakdown in RBL Bank and Punjab National Bank, and the heavies are still pending to show further weakness. The bigger ones have just come off the highs. The next leg will be more downsides, which drives the markets lower. So then the break of 16,747, the September low, is going to be most probably driven by the banks, or they'll be major contributors. So watch out for these. So don't get misled by short-term bump up.
Come on, Ajay, don't change your view. We're willing. We've seen a fair. Okay, let me put it another way, right? Let's just approach this from a global point of view. You would agree that lower yields are positive generally for risk assets like equities, Jay? Or you think in this case it's different?
Yeah, it's a very tricky bet to make. I would let the market dictate what it's doing, and we just follow the markets and leave it to the economists to say what it's going to do. But even not just the yields. If you look at gold and silver, they are showing divergent trends. And this looks, from what the market is telling me at this point of time, it looks like gold and dollar could go up together and silver could fall down. That's a very precarious situation that can happen only in the case of flight to safety. So there are very divergent things that are happening. So when it comes to yields, even if 330 bips on the US 10 years doesn't hold, I'm expecting 300 bips to hold and then resume the short-term up move. The short-term up could fall short of the 500 bips that I projected a few weeks ago, but the medium-term and long-term remains pretty much intact.
As a technical analyst, Jay, what's your call tomorrow? It's a big day, right, with the Fed decision, etc. What's your own sense? What's likely to happen?
It does look like the Fed could copy what the ECB has done. So we market could get a surprise with half a point bump up. But that's not my forte. I just leave the price action to interpret whatever the market is going to do. But we were talking about banks in the beginning, and you were talking about Credit Suisse and all. I just want to point out here, the next shoe to drop could be Deutsche Bank or Commerce Bank. It need not be tomorrow or day after, but there's a big pattern that's shaping up on Deutsche Bank. So if you want to be forward-looking, look at possible things that could emerge out of Deutsche Bank.
All right. Hi, Jay. Good afternoon. You've been coming on the show for the past couple of months and you've maintained this cautious view. And it's worked out well. So good on that call on the index itself. But the only problem from a bullish perspective is you're still expecting some more downside out here. So let's see how that plays out. One of the calls that they made, you're mildly bullish on the FMCG space, at least in the near term. Give us a couple of ideas out there. If you could name a couple of stocks with levels that you're looking at.
Yeah, see, the FMCG index is the only index that's probably holding up. Autos and FMCG were the strongest one. Autos have broken down from a double top, but FMCG is holding above 43,000. As long as that index stays above 43,000, there is still a scope for short-term plays over there. And ITC probably has got one last high to finish the structure, somewhere close to 400. And there's a tradable opportunity probably in Titan. From an extreme short-term perspective, if it holds 2,400, I think it's heading somewhere close to 2,650, 2,700. But I don't think fresh record highs are coming there. And Marico, it's still trending down. But if it sees a reversal tomorrow or day after, there's a probability that it's seen a short-term selling exhaustion.
Jay, the thing with your views is that they can rarely be forgotten. Commerce Bank and Deutsche Bank. I'm going to remember that. It'll sit in my head through the whole evening till I can digest it. But anyway, very interesting call there. I want to come back to the home market here and talk about Reliance. Now, given your overall bearish call, I don't know if you're making much of today's move. There's a lot of fundamental talk. There are targets around 3,000 odd on the fundamental side. But what are the charts saying on Reliance?
See, price is the best fundamental analyst, Surabhi. It's very difficult for people to come to that kind of conclusion. But you have to let go and understand whatever the market is saying. You got to completely agree to it, and it comes with a number of years of experience. And when it comes to Reliance, I pointed out a breakdown from a head and shoulder top for Reliance. So whatever we are seeing now, to me, it looks like just a short-term move. I don't think Reliance is going to rally much beyond 2350, 2400. But all it has to do is just keep from not going up. That will put pressure on the market. And 2180 is absolutely critical for Reliance. If 2180 breaks, it's got 10% downside from there.
But you don't see a reversal. I mean, today's move doesn't move the needle at all for you on the upside.
No, it doesn't. And in fact, it looks like it's pretty much within the script of what is expected of Reliance. I think it'll struggle somewhere close to 2350, 2400. Watch for it. If it does take out, then we can probably reassess that.
But your base case is that it takes out 2180 and heads lower, right?
Yeah, that's right. And when it comes to Reliance, I'm always excessively cautious when it comes to the bearish side. But the market setup is saying that it's headed down, and it's better not to be long. But you can take short positions as the markets break down on an intraday basis. But rather if you're going to be playing it on a positional basis, I would do it through monthly puts and other synthetic shots.
Very quickly, Jay, the call on crude prices?
Yeah, crude is heading somewhere close to 65 probably next week itself. And from there, I see a bump up for crude, somewhere close to 78. This is the Brent parity I'm talking about, somewhere close to 78. And then a very sharp low closer to the mid 40s to late 40s. That's the working thesis for me for Brent.
Okay, Jay, thank you very much. Good conversation as always. Appreciate you joining in with that perspective. Thanks indeed. Jay Bala, Cash the Chaos with thoughts on the market right now. We're up 115, 113 points or so on the index. We'll take a very quick break, more on markets in just a bit. There's 8 minutes to go for close.
Welcome back. Just a couple of minutes to go before the day closes out. And finally, we will have a close on the upside towards the higher end of the day's trading range. In fact, we're just about 20 odd points off it, practically ending at the highs. Before we start wrapping up the day, let's actually get you some opinion that we got from Sanjay Mukim of JP Morgan India. They are keeping a slightly cautious view on the market as they wait for a lot of the global events to play out. Sanjay also talks about the stocks, not the stocks, rather the sectors that he likes at the moment.
Well, of course, this has become a very macro market, and India, as I argued in one of my notes recently, we've kind of given up all the premiums we'd earned in 2022 over the S&P or over, let's say, EM, so in relative valuation terms. So India is now back in line with averages to the rest of the world. Even today, despite the fact that, valuations have become a little bit more comfortable, the potential downsides are still fairly large. At the moment, we stay with the large private banks, and even within the PSUs, the top larger PSUs as such. The factor that we always forget in cycles is liquidity issues. For investors such as ours, we don't want them to be caught in illiquid situations. We're seeing market liquidity fall. Participation in the smaller stocks is reducing. Large cap stocks is something that we clearly favor in our portfolios.
Okay, liquidity important in markets like this and always actually. That's Sanjay Mukim of JP Morgan. 120 points higher is where we're going to finally end the day at, which is not a bad outcome at all. Yesterday's high was 17,066 and we're ending about 50 points on top of that. which is a good outcome so far. Well, let me just quickly wrap up the day with the gainers sectorally, and then we'll get into stocks. So banks did well, although they could not really add on to what we started the last hour with. So the Bank Nifty ends up 1.3%. Private bank and the PSU bank indices both did well. The other space was oil and gas, I think largely thanks to Reliance. If anything, on the margin, other stocks were lower. GAIL, for example, is one of the top losers today, but Reliance is 3% move, did the job. And you also had the small cap and mid cap indices, which participated well, and they had 0.5%, 0.6% gains, which showed up in the overall market breadth as well. The big gainer, of course, on the Nifty stocks, Rima, is Reliance today.
Yes, so Reliance Industries takes the top honors today, 3.5% higher. And remember, it's rebounding after hitting a 52-week low in yesterday's trade. So from very oversold levels, the stock has made a smart comeback. But look at the kind of outperformance the banks have put in. The Nifty Bank ends with a gain of 1.3% versus the Nifty and the Sensex up 0.7%. So big outperformance, and the Nifty Bank is now above its 200-day moving average. In terms of names, it was Axis Bank, ICICI Bank, HDFC Bank, which gained 1 to 2%. Insurance companies, HDFC Life and SBI Life also ending significantly higher. Bajaj Finance and Bajaj Auto in the green. On the losing side, FMCG, IT take a backseat. HUL, Britannia, TCS and Infosys count as amongst the big losers. And Power Grid comes in for some amount of profit booking after the recent upmove.
Well, on the mid-cap side of the screen, the index is up about 0.5%, slightly underperforming the Nifty. But you have movers and shakers. I mean, wherever there was buying evident. For instance, look at a stock like Stovecraft. It's going home with gains of almost 9% as we speak. And then, of course, some of the newsmakers of the day, Sterling and Wilson for its NTPC order, up about 6%. Some of the asset managers, HDFC, AMC, UTI AMC, they've had very good session. HDFC, of course, in focus on the back of the block deal yesterday, 5% up on the stock today. Manappuram up and about. Some of the gas stocks, Gujarat Gas, IGL, having a good session on expectations of favorable pricing when the formula is reset come the 1st of April. So not a very bad day for the mid-cap market. GAIL, of course, stands out. It went ex-dividend today, so that stock was down about 4%. But other than that, a pretty okay looking screen on the mid caps. The bell goes off. The market has ended for the day with a total gain of 118 points, just above the 17,100 mark. Good day for the banks. The Bank Nifty is going home with a gain of 500.
Well, Europe and the European markets are also holding up with strength, so currently up 1.5%. So let's hope when we go to sleep tonight, all is well with the global markets, right?
You know, anything can happen. Let whatever happen happen when we go to sleep. But when we wake up in the morning, not the open, but the close which matters. Because as we've seen so often, you see very benign markets in the evening, and then an ugly close wrap up when you wake up in the morning. So let's hope.
And tomorrow's a big day, right?
With the Fed, right?
With the Fed,
Later
right?
in the
So tomorrow
evening.
is going to be a big day.
So you want some calm. Well, it's a wrap on this edition of Closing Bell, but don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.